This is Morning Stock Watch with the weekly market report for the week ending May 22nd, 2020. This report includes the broad market sectors, large movers for this week to include United Airlines, Norwegian Cruise Line, and Moderna. Starting with the S&P 500 ETF, SPY. Weekly closing price $295.44, up about 3% since last week's close. Looking at the weekly chart of the SPY, this past week we have a topping candle that closed 56 cents below the 296 target. 296 is coming from the bottom of this long breakdown candle on the week of February 24th. Its closing price is around 296. We then said 296 to 300 would be a good area for price to start turning around. On the weekly volume, we continue to have uninterrupted negative divergence, as we can see here. Price is moving higher as volume decreases, as price inches closer to 300. 300 continues to be a good natural resistance, as it is a whole number. The weekly closing candle mostly resembles an indecisive spinning top with a slightly longer upper wick to it at the top of a bullish trend and near a strong hold number like 300. Along with this, we have some inconsistencies with price spreads and volume, with the last few candles. Doesn't look the most stable. The hourly chart has mixed signals. As we can see here, we have a clear instance of bearish divergence between price and the indicators. It brought price down to the lows of 272. Price then had some bullish divergence on these lows here for a sharp move back up to highs and appears to want to hang around there for a bit. Maybe we'll see 300. Looking at the 11 market sector ETFs, simply looking at the weekly candles in comparison with the S&P, the past couple of weeks we see that a few of the sectors have already recovered their moving averages, while the rest of them are sticking very close to the bottom of the 9-period moving average. While we could have easily had a reversal by now in the market, these prices still remain right at resistance. Will we continue to have upside in the market next week? This week, industrials and energy led the market and showed some signs of making a recovery of the moving averages. Most of the charts continue to show a bit of weakness with negative divergence between price and volume, and we still believe that this is continuing to be a good candidate for a top. Now let's look a bit closer and see where the S&P can actually be going. As always, there's two sides to every trade. The idea is to be on the good side of the trade more times than not, with each trade having limited risk. With that said, let's see where this thing can go. If we were to look at the chart by the book, then it only makes sense that price should start coming down, right? We have price inching higher into the $300 area, with a couple instances of negative divergence between price and volume. It should come down, but price is putting up a good fight here at the $296 to $300 range. What if price decides to continue to hang out here in this area for a bit, swallowing up the divergences in the process? Then we're likely to see more upside, starting with the breakup candle on the week of February 24th. We'd reach 323 sooner than later. If we do see downside from here, 278 and 266 are solid areas of support. Price could try to revisit. Price has lots of opportunities to gap around at these levels. Next is the Norwegian Cruise Line Holdings weekly close, $13.90. The single stock with the highest amount of volume for this week. On the weekly chart, we have a very high volume doji, followed by a high volume hammer candle, however, still closing below the moving averages. On the daily chart, we have a symmetrical wedge that points to about $15.50. From the looks of the daily chart, things look bearish for lower prices, unless it could get a swarm of buyers to bring it above and hold above the resistance at $15.50. Next, we have United Airlines. Weekly close $25.40. The daily chart looks very similar to the Norwegian Cruise Line. Appears to have first failed a symmetrical pattern at $32, and then continues to develop a bullish wedge pattern with target lows of around $20. Only accounting for the candle opens and closes that we will get the downward wedge, which is normally bullish. And last we have Moderna, ticker MRNA, weekly close $69.00. The stock with the fifth highest amount of volume this week is up another 3% on Friday. The weekly chart is parabolic and have achieved all-time highs recently. Could this be the beginning of something really big, or will we see lower prices in the near term? We do have some bearish divergence on the day, but for stocks that really want to run up, the divergence won't matter even a lick if enough buyers are there. For those who want to watch stocks like these, keep an eye out for whole and half dollar marks on up and down sides. If you found this report useful in any way, please give a like and subscribe. Thanks for watching, and see you next week for another weekly report.